Have you ever looked at your bank balance and thought, wait, that doesn't make sense? You were sure you had enough money. You remember doing the math. You remember checking your app. So why are you suddenly hit with 3 overdraft fees, back to back, in a single day? Was it a mistake or was it something else? And here's the bigger question. If banks are supposed to protect your money, why do so many people feel punished for using them? Stay with me because by the end of this video, you'll understand something banks quietly hope you never connect. Now let's start with a story. Imagine it's Friday afternoon. You have $120 in your checking account. You buy groceries for $30. You pay a $20 phone bill. Later that night, a $90 rent-related charge hits. Logically, you'd expect maybe 1 overdraft. But Monday morning, you wake up to 3. How? Because banks don't always process transactions in the order you make them. They can legally reorder them. Instead of smallest to largest, many banks process from largest to smallest. That $90 charge hits first. Your balance drops below zero immediately. Then the $30 charge triggers an overdraft. Then the $20 triggers another. One mistake just turned into a $100 plus punishment. Former FDIC Chair Sheila Bair once said this practice had nothing to do with risk and everything to do with revenue. And she wasn't exaggerating. At one point, overdraft fees alone generated over $30 billion a year for U.S. banks. That's not protection. That's a business model. And here's the tension most people miss. You didn't break the rules. You just didn't know how the game was played. Now let's talk about something even quieter. Fees, ATM fees, maintenance fees, paper statement fees, convenience fees. Most people assume these are fixed, non-negotiable, final. They're not. Former bank employees have openly admitted that fee waivers are often available, but only if you ask. And bankers are trained not to volunteer that information. Why would they? Fees are pure profit. The Consumer Financial Protection Bureau found that many customers who asked politely had fees removed instantly. Same account, same bank, same rules, different outcome. So here's the uncomfortable question. If fees can disappear the moment you ask, why were they there in the first place? Now let's zoom out because this goes deeper. When you sit down with a financial advisor at a bank, it feels like guidance. It feels personal. It feels safe. But inside the bank, that conversation often looks very different. Many advisors are under sales pressure. They have quotas, targets, commission incentives. Products with higher fees earn the bank more money, even if they're not the best option for you. That doesn't make them evil, but it does mean their interests and yours don't always align. And this is where hidden fees creep in. Banks often offer no-fee or low-fee accounts. They just don't advertise them loudly. They don't suggest them during sign-up. Why sell you a free product when a paid one looks almost identical? Now let me ask you something important. Do you have overdraft protection turned on? Most people do. Most people don't remember choosing it. Here's the secret. Overdraft protection is optional. If you opt out, a transaction that would overdraw your account simply gets declined. No fee, no punishment, no spiral. But if you opt in, a $5 coffee can turn into a $35 charge. Banks frame overdraft protection as a safety net. In reality, it's often a trap. Now here's where things get scary. Cross-default clauses. This is something almost no one reads and almost everyone signs. If you miss a payment on one account, like a car loan, the bank may legally raise interest rates or trigger penalties on another account, like a credit card. One slip, multiple consequences. It's financial dominoes. Then there's deposit holds. You deposit a check, your app shows the money, you assume it's available. But banks can legally hold those funds for days, so you spend money you technically have, and suddenly overdrafts start cascading. It feels like a glitch. It's not. It's policy. And finally, the most overlooked truth of all. Banks make mistakes. Interest miscalculations, incorrect fees, wrong balances. Studies have found that errors often go unnoticed because customers don't check statements closely. And when mistakes benefit the bank, they don't rush to correct them. So what do you do with all this? First, you watch your statements like a hawk, not once a month, regularly. Second, you negotiate fees, rates, charges. Ask calmly. Ask directly. You'll be surprised how often the answer is yes. Third, seriously consider opting out of overdraft protection. Fourth, look at alternatives. Credit unions, for example, are member-owned and often offer lower fees and better rates. So let's answer the questions we started with. Why do banks feel like they punish you? Because penalties are profitable. Why do simple mistakes become expensive spirals? Because systems are designed to multiply fees. Why don't banks explain this clearly? Because confusion is profitable. But once you understand the rules, once you see the patterns, you stop being an easy target. If this video helped you see your money differently, subscribe to the channel. We break down systems like this every week in plain language so you stay informed, protected, and ahead. Your money works too hard for you to lose it to silence. Here's the wrap-up. Banks can legally reorder transactions to maximize overdraft fees, hide negotiable charges, push high commission products, and enforce clauses that multiply penalties across accounts. Overdraft protection is optional, fees are often negotiable, and errors happen more than people realize. The key defense is awareness, regular review, negotiation, and choosing better financial alternatives.